Thank you for joining us. My name is Anda Bordian, and I work on our investment team focused specifically on emerging managers. And I have here with me today my colleagues, Alifia Doriwala, Managing Director at RockCreek, and Tyson Pratcher, also Managing Director on our investment team. We're extremely excited to be spending the next couple of minutes with you talking about RockCreek's emerging manager platform. And again, thank you so much for joining. So I'll kick it off with the first question for both of my colleagues. How do you define an emerging manager? Are there specific track record and or AUM requirements for a manager to meet the emerging definition?
So it's a great question, Anda, and I'm sure one that a lot of managers think about because we get that question, I would say, a couple times a day at least from some of the emerging managers that we talk to. And so I would say that it obviously is a different definition across public markets and private markets. But generally, we try to look at managers that are newer, younger, maybe starting a fund 1 or fund 2, maybe have less than 3 years of a track record. That being said, there are also emerging managers that we would consider still as emerging because they only have, a certain size in terms of assets. Let's say they're maybe only at around 50 million and they have been around for a longer time. Or again, they're on a fund 2 or a fund 3, but again, their asset size is smaller. So we try to be really opportunistic in terms of looking at the universe and not trying to have strict definitions when we are sourcing and for our research database. That being said, with many of the institutional partners that we work with that are very focused on emerging managers, they do have certain considerations and they might have certain areas that they want to target within the emerging manager space. And that's why we try to, again, have the broadest universe of emerging managers so that then when we're working with partners and we're looking to build portfolios with partners that are interested in increasing their emerging manager area, we can really look and see what is the appropriate area within our universe that's targeted towards what their objectives and goals are.
I think that really captures it. If you just think about who Rock Creek is, one of our competitive advantages is our ability to track managers across time. And so we've really built a database that is agnostic to size, agnostic to anything other than, tracking managers. And we built, a few thousand of those. And then we really work with our clients to customize what they want. Some people want more MWBE. That number may be 50% for some, and maybe 30% for some. It may be size constraints. It may be fun. And so a lot of that bespoke work is in some ways driven by client definitions. For us, though, right, we're focused on identifying them irrespective of client demand, and then ultimately, hopefully, finding top flight managers and finding a client that we think they make sense to partner with.
And I think, Tyson, that's such a good point, because I think that's one of the reasons that we've also been very successful in terms of our performance and in terms of our track record, if you just look at strictly the emerging manager space, because we try not to have filters. We try not to have biases in our sourcing. And that's where I think a lot of investors get tripped up, right? They already start with such a narrow definition that they might be missing the forest from the trees in terms of when they're actually looking to create an investment strategy around this.
Very helpful, thank you. When did RockCreek start managing emerging manager portfolios across both public and private markets?
So, we have been investing in the emerging manager space since day one of Rock Creek. Part of the DNA of Rock Creek, when many of our colleagues were at the World Bank and many of us were investing in other areas or other places, was that we were always looking for the newest talent, the brightest talent, and we were looking for a diversity of thought, background, experience, because that all translates to diversity in your portfolio in terms of the investments. And so I would say that while day one, we were always looking to invest in emerging managers, we have also had that experience prior to coming to Rock Creek. Of course, there have always been, or there has been an evolution in the industry in terms of formal emerging manager programs and areas like that, which investors have come to us to partner with. So that's also obviously increased over time in terms of more formal. But I would say that one thing that I think stands Rock Creek apart in terms of how we approach emerging managers is that if we like a manager and we think they're a great source of alpha and return, and that they will have a great value add to one of our investment strategies, we will put them in a portfolio, regardless of whether it's an emerging manager portfolio or not.
As someone who works on the investment team at Rock Creek, I'm keenly aware of, the depth of our due diligence process. Just wanted one of you or both to touch on some of the screening requirements that you use or we use as a firm to select an emerging manager.
Yeah, I would say that the screens, to the extent that there are any, hard and fast, aren't particularly different from the emerging manager from other firms. There are clearly things in our diligence that we're going to maybe pay more attention to as it relates to an emerging manager. Maybe the emphasis is a little bit different, but the basic building blocks around, track record, making sure there's a differentiated strategy, making sure that, the team is aligned, understanding where the performance and the outperformance comes from, understanding whether their process is repeatable. Those things which are really driving a lot of our diligence would likely be the same, no matter who we're evaluating. Now, there are clearly some peculiarities around what I would call business risk that you really need to make sure that you're focused on as it relates to emerging managers, making sure that they have enough runway, making sure that that this is going to be a long term, and that they are fully understand how long the process is to kind of get to where they want to go. But at base, a lot of the screens look the same. The one thing I would say, right, is that also, just although this is somewhat unrelated, right, the word screen can kind of have a negative connotation, right, where there is some it's almost like a bar to entry. And I'd argue, right, that we don't have these artificial bars to you having a conversation with us. We're going to do the work. We're going to bring it in. We're going to touch many of the things that I mentioned earlier from a diligence perspective. But we don't approach any of our diligence, much like we don't approach any of the sourcing for our database with anything except an open mind, with the view that we should be looking at everyone, because talent resides everywhere.
And so much of investing in emerging managers, which is why I think we find it so much fun, is getting to know the emerging manager, right? Getting to know the firm, getting to know the people, like understanding their background. So as much data as we do try to collect with emerging managers, it's a different type of data. And I think that qualitative aspect of it, in terms of just really understanding the person as well, helps, in terms of that due diligence process, and is something that is a little bit different with emerging managers.
My next question segues really well with the prior one. So what is RockCreek's edge, in your view, in identifying attractive emerging managers early in their life cycle? And perhaps, how do we use our database to kind of further that, as well as some of the internal network and reputation that we have? Maybe Alifia or Tyson.
Yeah, I'll start off, and then Tyson probably has a lot more to add. I think one of our edges is that we have a mindset of really trying to be open about listening to new investment strategies, new talent, right? So I think that if we were working in a different culture, we would have maybe a little bit more of a mindset of, okay, these are the prescribed buckets I need to fill, or these are the prescribed areas I have to fill, or there's no top-down assumption that this is what I have to have. And I think that mindset of being very open and knowing that maybe some strategies are not appropriate today, but that doesn't mean that we don't want to learn from those managers. It doesn't mean that we don't want to follow them. It doesn't mean that in 5 years, that might not be something that's appropriate. And so that's why I think it's a mindset that makes us different in terms of how we approach investing in emerging managers from the very beginning. And I think that has, again, contributed to a lot of our success in terms of not missing out on opportunities that on the surface might seem like, oh, they're not going to fit this bucket, or they're not going to fit this portfolio or exposure. But really, we're rather trying to understand the investment strategy, understand the firm, understand the people, and then looking to see where it's appropriate.
The one thing that I would add is that, Rock Creek has a reputation for being willing to do the work and to actually allocate early to managers. That's important, a necessary piece, but not sufficient. The last piece I would say is that they also have a history of selecting managers that perform. And what happens over time is that as the firm has spent 20 years or so doing this, I'd argue that, a lot of the edge, a lot of the sourcing that comes is because managers understand, one, that Rock Creek is a place that will give them a hearing. They also know that because Rock Creek's managers have performed, it makes them easier for them to go to someone else because they can say, hey, I have capital from Rock Creek. You understand their process. You understand that they've backed people who've had tremendous success. And in many ways for managers, that validation is very important when you're an emerging manager, and it drives people to come see the firm early, even before they maybe launch. And so that's just a kind of a goodwill that you can't really quantify sometimes, but I think really goes to the heart of why we get so many of these very early calls.
And I should emphasize also that the Rock Creek team is really our edge as well, right? Because we have a diverse team. We have a team that's actually allocated and invested in these different strategies. So hopefully we bring to our due diligence perspective something different that allows us, again, to do exactly what Tyson is saying in terms of choosing the best emerging managers out there and having that performance. But I think our team is just very unique in the fact that it is so diverse in terms of its background, its experiences, and that all I think does help in terms of the culture and mindset when we look at investing in emerging managers.
To transition a little bit more from investment to business and organization, in your view, what are some of the challenges emerging managers face when setting up their businesses? And how has Rock Creek helped these managers overcome obstacles?
I think that most firms, most emerging managers, in my experience, that have issues or maybe don't succeed, it's not despite what you would think, it's not usually the investment issue that brings them down, right? It is oftentimes much more related to business risk. And so, what Rock Creek is trying to do when we partner with people is really figure out ways that we can reduce the business risk for the entrepreneur while helping them focus on the thing that they do best, which is invest. And so a lot of what we're doing is working with them early on, as I mentioned earlier, hopefully even before they launch, to help them figure out best practices, figure out how to set up their back office, talk to them about which kind of law firm, talk to them about what kind of auditor they need, talk to them about how their compliance should work, talk about all the things that can trip up a business. We're also focused on the investment piece and making sure that you have the right process and all the people are aligned in the same ways. And so it is really the totality of those things. And so one of the things that we've been, talking about even internally, right? We've even, taken the idea kind of to another level and really thinking about how we can even more formalize some of the advice and some of the resources that we have made available on a more one-off basis to many of the people that we've sourced to really make it even more widely available. And so we're working on several ideas for that. But I think that for us, right, really figuring out how to make the firm sustainable, how to deal with the business risk challenge, how to expose them to best-in-class processes is really where we spend a ton of our time, because ultimately we want them to be successful. We want the firm to be around for a long time. And because it's just in the DNA of who we are, we don't get paid to do that, but we think that's just what you need to do to make the ecosystem stronger.
No, I think that's exactly right in terms of the hallmark of kind of what we consider our emerging manager platform. Of course, everybody wants the dollars, but part of hopefully what they also get when they talk to Rock Creek is that experience and is that advice. I can't tell you how many times managers have come to me before they've ever even launched a fund and just said, I don't know what are the terms out there, right? Like we all kind of penalize investment funds for giving us bad terms, but then we don't help them when they say, what are the standard terms, right? Like what is acceptable to an institutional investor? Or there was a manager who came to me and said, I'm getting a lot of interest in separate accounts. Should I do that? Or I have thought I should start with the commingled fund. Or, is a fund one of a size that's smaller okay? Or will that kind of pigeonhole me? What type of investors will kind of taint me in terms of future investors? And hopefully Tyson has been doing this for so long. All of our colleagues at Rock Creek have been doing this for so long that we can use our perspectives and give them advice in ways that hopefully also is meaningful to their business, not just the dollars.
My next question is around seeding arrangements. And we all know that these are quite popular in the emerging manager space as they get their businesses off the ground. In your view, what is RockCreek's perspective on seeding arrangements? And my second question is, what advice would you give to managers considering such arrangements at launch or further down during the setup process?
I may defer a little bit to Alethea on this, but my general view is that seating arrangements are like any other transaction. It's a risk and a reward proposition. As a general matter, I think they're totally fine, right? I think that partnering with the right person who can maybe help you scale faster, who can help you make sure you have the resources who you think can be a long-term strategic partner, likely makes a lot of sense depending on your, depending on where you're sitting. And, it has certainly become more and more, mainstream. And I think that what may have happened, maybe some of the deals that people made 20 years ago, I think that people have gotten much more sophisticated about how they work for both sides and how we figure out what this looks like 10 or 20 years from now. I don't think that coming to see us that we have any there's no negative view, or you're not looked at any differently because you have a seating partner. For us, that's that could very well be the thing that gets us even more comfortable, right? Depending on who the partner is. And so it's really a bespoke case by case basis, but I think we approach it with a very open mind with the view that they can be very helpful and very additive.
Yeah, and I would say that if I were talking to an emerging manager, and again, a lot of managers have come to us and said, these are kind of like the 3 deals I have. What should I do? What should I take? I think you have to do a lot of due diligence on your seed partner, because to Tyson's point, the right partner will cause us to do maybe something even faster and cause other institutions to find that comfort. And the wrong partner might do the opposite. So I think it's a really tough thing to do if you're an emerging manager, but you really have to do your homework on the reputation of that seed partner. Do your homework, talk to other managers that firm has seeded, see how their trajectory was. You have to trust the people. I think there is a lot of due diligence that goes into having a good seed partner. And I think the right one can build your business, and the wrong one can sometimes kill your business. I'm a big proponent of managers understanding who their partner is. And it's actually surprising because a lot of times you ask about their partner and they don't really understand why, sometimes they're partners that are not traditional seed investors that we all know. And I mean, that happens a lot of times. And it's an offshoot of a family, or it's an offshoot of a company, and you don't really understand the relationship. And we ask all the questions on the seed partner, and sometimes the managers can't really answer them. So I think that's something to just watch out for if I was a manager launching a fund today and I had the opportunity to partner with a seed.
My next question actually ties into the fundraising process for emerging managers. How do you feel that the recent COVID-19 pandemic has impacted the fundraising ability of emerging managers?
I think there's no doubt that it has made things tougher. Overall, right? I think, but right, I'd say 2 things. I think that on the one hand, clearly not being able to have the high touch in person, certainly on the margins, hurts the person who doesn't already have the established relationship. I think that's just human nature. The one thing that I would say is that what COVID has also done is that, as we're sitting here doing this by Zoom, right, it has allowed investors to maybe do more meetings in a more efficient way than they would have otherwise. And so so on the other side of the coin, you're likely able to see more people and get in front of more folks than you would normally. But I think that in some ways, like a lot of things, COVID has allowed people to kind of fall back on their on their prior beliefs, and the folks who were previously very excited and committed to emerging managers see this as an opportunity, right? Because there's dislocations. They feel like there is an opportunity today to lean in even more. And those who maybe were more skeptical about the space have used it to retrench and to say, hey, let's invest in larger managers until this passes and we can get to know people and the like. But I think that, the reality is that, it just kind of depends on your view. I think that maybe on the margins, it's made it more difficult. But I think there's actually been a lot of positive, and I think that additionally, a lot of the positive around, obviously what happened in the spring and the protest has allowed many investors, particularly from the MWBE perspective, who maybe had been thinking about it, to kind of accelerate their thought process and say, let me spend a little bit more time. And we certainly have been getting a number of those calls. And so, I know I didn't really answer your question. I basically said, I don't know.
Oh, you answered.
But
I think that was very helpful.
but I think it's not quite a straight line. It's not as, it's not as clear. But I think we'll really know 2 years from now whether which one of my ideas is correct.
And I think it's also the implications of like COVID. One is just physically how you do due diligence and all of that, right? I think the other implication that I've heard is that some were just kind of focusing more in on their current portfolio, right? They were worried about market risk. They were worried about what's going to happen in the long term, all because of COVID, obviously. This was a little bit also more the sentiment, I feel like, post-March. Of course, now, we've had one of the best market rallies, so some of this maybe has gone away, but there was a big worry about like, let me just look and underwrite my current portfolio. So maybe not a bias towards emerging managers, not investing in emerging managers, more a bias towards like, I just have to kind of retrench. I don't know if I should take a new risk on any type of manager, whether it's emerging or established, whether it's a new strategy. So I saw that as I was a little bit surprised. And I think that maybe does impact emerging managers, right? Because there's that mindset of like, I'm not doing too much more outside of it. I think that has gone away a little, but I also think that there's nobody that I've heard who's saying, I'm not going to ever hire a manager over Zoom. It's been almost a year, and it's going to probably be a year and a half until, or two. You can't not do anything in your portfolio probably for 2 years, right? So in some ways, I think also as we get further and further along in this type of working environment, there has been this recognition that we have to move forward. I know at Rock Creek, this has not stopped us from making investments that we would have. We are doing due diligence in different ways, smarter ways, better ways, and ways that we can actually take advantage of the situation that we're in, but it has not stopped us from making investments. And so hopefully that is the same for other institutions, and that will ultimately hopefully benefit some of these emerging managers that have been able to, as Tyson rightly pointed out, reach more people than they would have if they were physically going to everyone's offices. And the other thing I have heard from emerging managers, and I think it's 100% true because I see it at Rock Creek, is that at a firm, they get more exposure. So we have a lot of emerging managers, as you both know, who come and speak at our 9 o'clock daily investment team calls. That is something they would never have probably had 30 people in a room if they had come to the office. So.
Yes, I can definitely see all those benefits happening in action. My next question ties into emerging manager performance. I mean, there's a lot of talk in the allocator community about the strong and differentiated return stream that emerging manager can add to a portfolio. Do you have any specific insights on emerging manager performance, particularly as it stacks up against the performance of more established managers?
I mean, I would say that if we look at our data, and we have a lot of data on this, both on the private side as well as on the public side, the best emerging managers, the top quartile emerging managers, are just as good, if not better, than most of our established managers in the same peer group. I think there's definitely a benefit to being in more of a niche strategy, potentially being a little bit hungrier, having, kind of the fact that you can start fresh your portfolio in this environment where there's so much opportunity. Starting fresh is something very different than having had a portfolio that you've had to manage, for the last 10 years, and then seeing the hit that something like COVID takes to it. So I think there have been a lot of benefits just also over the last year. But I think if we look at longer term data, we definitely see in all cases, private and public, that emerging managers stack up just as well, if not better at times, than our established peers.
Yeah, and I honestly think at today, right, I don't think there is much debate around that, right? I think that we see it very clearly over the 20 years of our firm, but I think we've seen study after study, whether it's Kaufman or NAIC, many of the public pension plans, the notion that emerging managers underperform, I think, has been pretty dramatically proven to be a fallacy, and so. It's still, right, the onus is still on us and the folks who are really advocates for this space, right, to make sure that that message gets out. But I think that the reality is that there's been enough data over the last decade that it's very difficult for us to I believe, to come to any other conclusion other than that there is outperformance in the emerging manager space.
This has been an extremely helpful conversation for me, and I hope the managers enjoyed watching this. Thank you so much to Tyson. Thank you to Alifia. I appreciate your time today, and hopefully we'll see each other again soon via Zoom.